I'm Ryan Iverson, and this is the Investor Breakout Weekly Insight. Let's talk about what happened this week. Canada is doubling down on critical minerals and doing it with allies. Prime Minister Mark Carney says a new partnership with Australia could create one of the largest reserves of critical minerals held by trusted democratic nations. Together, Canada and Australia already produce huge portions of global supply, including about 34% of the world's lithium and roughly 1/3 of its uranium. The goal is simple: link mining, processing, investment, and research to strengthen supply chains and reduce dependence on dominant powers. The alliance is part of a broader strategy for so-called middle powers. This includes countries like Canada, Australia, Japan, and European nations to work together in a more fragmented global order. Between them, that group represents a massive economic bloc, with a larger combined GDP than the United States and trade flows triple those of China. For investors, the message is clear. Critical minerals are now central to economic security, defense, energy transition, and technology supply chains. And Canada intends to be right at the center of it. So here's a question for you. Do partnerships like this between Canada and Australia actually strengthen the West's control over critical minerals? Or will China continue to dominate the supply chain anyway? Let us know what you think in the comments. Energy markets are on edge, and now the world's largest economies are preparing for their next move. The G7 is a group of 7 of the world's major advanced economies: the United States, Canada, the United Kingdom, France, Germany, Italy, and Japan. The group has asked the International Energy Agency, or IEA, to examine whether strategic oil reserves should be released to calm markets. The spike comes as conflict in the Middle East disrupts supply through the Strait of Hormuz, a critical shipping lane that normally carries about 1/5 of the world's oil. Rather than immediately releasing reserves, the G7 wants the IEA to assess market conditions and prepare scenarios so governments can act quickly if shortages worsen. IEA countries collectively hold more than 1.2 billion barrels of emergency oil reserves, with hundreds of millions more held by industry. Even the possibility of a release moved markets. Oil dropped roughly 10% as traders weighed the prospect of emergency supply hitting the market. But the risks are still significant. Some analysts warn that if disruptions persist, oil could climb back up above $100 a barrel, and in extreme scenarios, even higher, which raises the bigger question. Should governments step in and release strategic reserves to stabilize markets, or should oil prices be left to find their own natural level? I'm Ryan Iverson, and we'll see you next week.